Don't keep your cash in the bank. 6 assets that are better and safer than cash. Keeping all of your money in a bank account may not be the best course of action for preserving and growing your wealth in this day and age of low bank interest rates and erratic economic happenings. The adage "cash is king" is no longer entirely true. Instead, more comprehensive and dynamic financial planning is in place. The secret to long-term financial stability is frequently not in a bank vault, but rather in a diverse portfolio of investments that have higher potential returns and greater security than conventional cash deposits. The top 6 assets that outperform and are safer than cash are listed here. Number 6. Gold. For the past 50 years, owning gold has been perceived as a haven and a hedge against inflation, making it a preferred asset over cash. These are a few of the reasons. The consensus is that gold is a good inflation hedge. Gold maintains its worth because it is a physical object that cannot be generated at will, unlike fiat currencies, even in situations where real returns on currencies and other assets are negative. Gold owners are shielded from the depressing impacts of inflation since gold tends to appreciate along with the expense of living. Gold has the potential to serve as a hedge against currency risk. There may be a spike in the price of gold in a certain currency if its value declines dramatically. Those who reside in nations with unstable or hyperinflationary economies will find this very helpful. Gold is a haven asset for investors during times of geopolitical or economic unrest. In times of crisis, gold typically retains its value better than other asset classes. Portfolio diversification. Compared to other financial assets like equities and bonds, gold frequently performs differently. This means that if you already hold equities, it's a useful tool for diversification. Acceptance across the board. For millennia, the value of gold has been widely acknowledged. This implies that gold's value will continue to be acknowledged globally in financial markets even if the value of a fiat currency declines. Restricted supply. The supply of gold is restricted in contrast to fiat currencies, which governments can produce indefinitely. The value of gold is preserved in part because of its scarcity. Although gold provides numerous benefits, there are hazards involved. Short-term price volatility is possible for gold, and there may be expenses related to storage and insurance. Additionally, gold does not yield income in the form of dividends or interest. Additionally, exchange-traded gold funds are available for purchase. As with any investment, it's critical to give these things significant thought. Number 5. The S&P 500 Index. Because of the compounding effect and potential for higher returns, owning an investment in the S&P 500 Index is frequently regarded as preferable to retaining cash. This is the reason why. Higher returns in the past. When compared to the interest obtained by keeping funds in a standard savings account, the S&P 500 Index, which represents a broad diversification of the U.S. stock market, has yielded much higher returns over the long run. When capital gains and dividends are taken into account, the S&P 500 has enjoyed an average annual return since it found almost 10% before inflation. Investing in an S&P 500 index fund is an example of a passive investment strategy, which means it takes minimal time or expertise of specific firms to invest. For those who lack the time or willingness to actively manage their finances, this makes it a simpler investment approach. Diversification. Investing in 500 of the biggest U.S. firms from a variety of industries is what the S&P 500 offers. Because of this diversification, there is less chance that any one company or industry will do poorly. Dividends. A large number of the S&P 500 index businesses offer dividends to investors, which they can reinvest to increase their investment and serve as a source of income. Capital appreciation. The S&P 500's value has steadily increased over time, offering the possibility of large capital gains. Investing in stocks can serve as a hedge against inflation, preserving purchasing power. Businesses tend to make more money when they raise prices over time, which raises the price of their stocks. Power of compounding. The power of compounding allows your investment to expand exponentially over time when combined with the long-term trend of upward growth and the reinvestment of dividends. Number 4. Property. Several people choose to invest in real estate because it has several benefits over keeping funds in a bank account. This is the reason why. Appreciation. Real estate typically sees an increase in value over time. Although short-term market swings can result in a decline in real estate prices, traditionally, U.S. real estate has grown over time, yielding substantial capital gains. Rental income. You can get a consistent income stream by renting out your real estate, which is frequently greater than the interest you would receive on funds in a bank. Particularly in retirement, this rental income can provide a consistent source of income and assist to defray the costs of the property. Real estate is frequently regarded as a strong inflation hedge. The cost of purchasing or renting real estate rises in tandem with the cost of commodities and services. Therefore, when inflation rises, so too could the value of your real estate and the rental income you receive from it. Existing residences are more expensive due to inflation-related replacement expenses. Number 3. Terrain. Similar to real estate, owning property has benefits over storing money in a bank. Here are a few explanations for this. Appreciation. Over time, land frequently gains value. Land can appreciate greatly in value over time in many places, particularly those that are growing or developing. However, this isn't always assured. In contrast to properties, land is based on a variety of factors, including location, zoning, and the general demand for land in the area. Land also doesn't depreciate due to age or wear and tear. Scarcity. There is a limited supply of land in contrast to other assets. Because land is naturally scarce, it can become a valuable asset as demand rises due to development and population growth. Potential income generation. Land can be used to provide revenue based on its features and location. This could entail developing the property for rental properties or leasing it for farming, logging, mineral extraction, oil drilling, and natural gas wells. Reduced upkeep and expenses. Compared to residences or buildings, unoccupied property usually has lower upkeep expenditures. There are no maintenance and repairs, mortgage insurance, or utility payments. Number 2. Securities protected from inflation by the Treasury, TIPS. For several reasons, investing in Treasury inflation-protected securities, TIPS, may be more advantageous than keeping cash in a bank. Inflation defense. TIPS provides inflation protection, as the name implies. The purchasing power of your investment is safeguarded by a TIPS, whose principal rises in line with inflation as determined by the Consumer Price Index. You will get either the original principal or the modified principal when TIPS matures, whichever is higher. Frequent interest payments. Twice a year, TIPS provides interest at a set rate. Interest payments increase with inflation because the rate is applied to the adjusted principal, just like the principal does. This offers a consistent source of income, if not large. Risk reduction. Because TIPS are backed by the U.S. government's authority to tax its citizens, they are a very low-risk investment. This is because they are issued by the U.S. Treasury. Many investors find this level of security appealing, especially those with reduced risk tolerance. Greater potential yield than a savings account. In a situation when inflation is on the rise, TIPS can offer a higher potential yield than a savings account, even though their yield is usually lower than that of other investments like equities or corporate bonds. Accessible and tradable. Although the TIPS market isn't as liquid as ordinary treasury bonds, it is nevertheless possible to buy and sell TIPS on the secondary market, offering a certain amount of liquidity. Individual investors are able to purchase them directly from the U.S. Treasury at auction in quantities as low as $100. TIPS exchange-traded funds are another option. Number 1. Bitcoin. When compared to keeping cash in a bank, Bitcoin has historically been a highly performing asset, but it also has a special set of risks. For these reasons, some have found Bitcoin to be an attractive investment. Robust historical returns. Since its launch in 2009, the price of Bitcoin has increased significantly. Despite its extreme volatility, early adopters of Bitcoin who stuck with it through its ups and downs have made significant profits. Limited supply. An algorithmic cap of 21 million coins is placed on the quantity of Bitcoin. Many investors find it appealing because of its inherent scarcity, which has the potential to drive up prices as demand grows. Decentralization. Since Bitcoin runs on a decentralized network, it is not governed by a single government or other central body. Because of this, it is impervious to censorship and cannot be undermined by measures like quantitative easing, which have the potential to reduce the value of fiat currencies. Digital gold. Due to its similarities to the valuable metal, including its scarcity, decentralization, and lack of reliance on any one particular economy, Bitcoin is frequently referred to as digital gold. To boost its supply is also mined. This analogy implies that, like gold, Bitcoin might be used as a hedge against inflation and a store of value. Growing adoption. As a payment option, Bitcoin is becoming more and more popular among individuals and businesses, which has made it a more desirable investment. Bitcoin will become more in demand if this trend keeps up. So this is the end of our today's video. Do you like it? Kindly give your valuable response in our comment section below, and don't forget to subscribe to our YouTube channel for more interesting and informative videos.